Hello student, this is another basic demonstration of investment analysis that will help you to revisit the three methods that we generally use in our investment analysis. The one is called NPV, the second one is profitability index, and the third one is IRR. I have covered IRR in a separate lecture, but again giving it here so that you can see in the combination of other methods and with the information given, then how can you apply various method in one go? Now look, investment is given 500,000, keeping it as negative amount because we are investing it. Scrap value of the plant is 50,000. Life, just keep 5 years. And cost of capital is 12%, while the cash inflows for the various years are given. And I'm interested to find out only three methods in this question, one NPV, profitability, and IRR. So I'm skipping these two. So as we discussed earlier in the previous lectures, that if you know the cash inflows of different years, your first work is to find out present value of these cash flows. And to calculate present value, as you have seen PVCF, we discuss over here that PVCF stands for present value of cash flow. So to calculate it, I need discount factor. Do you know what should I do to calculate discount factor? If you don't know, then check the time value of money chapter where we will calculate how to calculate present value. To get discount factor, I need cost of capital, and I can convert this into discount factor, or you can say that I am interested to calculate present value of this amount. So sorry, to calculate discount factor, we will take 1 plus discount rate, that is 0.12, and then I can bring power in minus. So this is the structure. You can check it from the present value 1 year formula and see that if you are using this formula, that present value is equal to future value bracket 1 plus r to the power minus 1. See that you will get the same factor. Then you will be quite sure that how we apply it on Excel. Since many things are constant and only I am taking year as changing, so I can drag it. So I will get different years discount factor. Now again check through your own calculation that if you are applying the same formula by taking minus 2 as power, then your discount factor should be close to this value. So discount factor is important, and for this you need to be good in present value understanding. If you know how to calculate present value, then of course it will not create any problem for you. Once you have done this one, then to calculate present value, we need cash flow and we multiply discount factor. So I hope that this will help you. So check, I'm taking this information multiplying by this. So once you take cash flow and you multiply it by the discount factor, your resulting answer will give you present value of cash flow. Then student, you simply drag it, you will get present value of different years. If you don't like decimals, then you can remove it. Now coming to NPV. Student, to get NPV or net present value, we need investment. So investment is given here. So you can use the same information without any problem. So investment is 500,000. And student, I need present value of cash flow. To calculate present value cash flow, look, I already have computed present value of cash flow. So I will take its sum. So its sum is coming 56. This is the amount that I will copy here. So my resulting amount is 564. Now think yourself. Your investment is 500,000. The present value of cash flow that you are getting is 564. Should you accept this project or not? Of course, we will accept the project because my investment is less than the cash flow I am receiving. Carefully see, it's up to you. If you are sure that you understand the NPV method, then there is no difference whether you are keeping it negative or positive. But since in general mathematics, we generally keep positive amount first and negative amount minus. So I'm keeping present value of cash flow earlier, and then I will subtract investment from it to get present value of this investment. So my NPV amount is 64. Since this amount is showing that I am getting more amount as compared to the amount I am investing, so I will accept this project. Profitability index requires two information. One, present value of cash flow, and we divided it by investment. So you can see that present value of cash flow is given 564. You can either check and take it from here, or you can go back to the present value cash flow that you calculated here. So this will help you that this is 564. You can take its total sum and divided by the investment you made. If this answer is greater than 1, if this answer is greater than 1, then we can accept the project. To calculate IRR, I would suggest that you check my video that is specifically addressing this method. But I'm again describing it here so that you can understand that once you have a lot of informations in one question and the question looks like a jumble up, but still you can calculate IRR in a very easy way. So to get IRR, what I will do, I will simply take my investment in negative form. The only thing that I will do, I will keep my investment with negative sign, and I will keep all the cash inflows as positive amount. So look, this is your investment that you can check from here, right? And these are the cash inflows that was given in the question. Now coming here, go to functions. In financial, ask IRR, and it will ask you to give certain values. Look, you don't need to make any change over here. Just keep your cursor here. Come back to your values that you placed earlier on a separate section. and just drag from first to last one. Again, see, when you will drag it, you will take care that the first amount that you are showing as investment should be negative, and all the amount after that should be positive, that is showing your cash inflows. And if you make no mistake, then the result will be appearing here. Once you are satisfied that you have taken the complete control on the data, just click it and get your uh, IRR. I hope that this will give you much better idea that how to calculate NPV, profitability index, and IRR in one go. If investment is given and cash flows are given for various years, cost of capital is given, then how these information might be converted into uh, different methods, and you can take your decision. Another thing that I am explaining here is this one. Now look, firm sold assets at 40,000 and its cost is 100,000, accumulated depreciation 70,000, tax rate is 40%. How much cash firm will realize by selling this asset? Looks quite complicated, but if you know the basic concept of depreciation, then you can do it easily. Just take care where I will highlight that how we calculate cash flow. So I'm taking the title as plant. So plant value is 100,000. Accumulated depreciation is 70,000. So what should be book value? Book value, do you know? No. Then please check here. I'll take cost of the equipment will minus accumulated depreciation. The difference will be book value. Now carefully check that the book value of the machine is 30,000 while you are selling it equal to 40,000. Now take these two information and think carefully without going in much complication of finance, whether you are getting profit or you are getting loss. Yes, book value 30,000. Selling price, the price at which you are selling is 40,000. So keep it in mind that in your mind, the value of this item in your books of accounts is 30,000. So you will say that you are gaining sale on plant. And how much gain you will report? Up to you, you can take help from the question. So this is gain on sale of plant 10,000. Whenever you show gain, tax applied on gain. So how much tax you will pay? This multiplied by the tax rate which is given in the question. This is 0.4. So you sold a plant at 40,000, but since on this selling you showed a gain of 10,000, so you need to pay tax on this one. So what is cash inflow by selling? Think. Your answer will be 6,000. Your answer might be 40,000. Cash inflow by selling. Your answer might be 30,000. But the correct answer is you are selling for 40,000 and you paid tax of 4,000. So you will take this minus tax. Your cash inflow by selling is 36,000. So this is the cash flow we will report when we will prepare a capital budgeting question in the last year of the project, that this is the cash inflow we are able to obtain from sale of plant. Remember that this kind of questions will come at certain places, so it will help you a lot how to calculate cash inflow by selling assets. I hope that you will enjoy these two questions and give me your feedback by comments. If you didn't subscribe, then subscribe it. Various lectures will help you and will give you from basic to advanced level understanding of different topics. Thank you. Thank you very much.